Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Putin pushes back. Russia's president agrees to limit attacks on Ukraine's energy infrastructure, but refuses the 30-day ceasefire demanded by the U.S. Talks are set to continue in Jeddah at the weekend. Israel's Prime Minister warns the strikes on Gaza are, quote, only the beginning, vowing more pressure until hostages are released. The Hamas Health Ministry says at least 400 people have been killed. Plus, Asian exceptionalism. Shares gain in Asia for a fourth straight session, batting aside a U.S. tech-led sell-off. Every Mac 7 stock is now down year-to-date. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Once again, a lot to digest in terms of geopolitical news overnight with the reaction to that Trump-Putin phone call. We will be talking more about that on the show, but ultimately stopping short of Putin agreeing to a 30-day ceasefire. So perhaps a little bit of a disappointment for anyone who expected a breakthrough. And of course, keeping a close eye on the developments over here in the Middle East as well, with the airstrikes and the fallout from the airstrikes in Gaza. But for markets yesterday, we did see a bit of a pullback, both S&P and Nasdaq ending the day in the red. As we were just saying in the headlines, all of the Magnificent Seven stocks are now tracking negative year to date. The last of the Magnificent Seven that was still trading positive a few days ago was Meta. That is now negative as well. So it does tell you about how sentiment has really turned through the first couple of months of this year. Today, though, futures leaning towards the green, S&P up 0.2, the Nasdaq up 0.3%. Brent also in focus, and Brent doesn't really know what to do with all the headlines that are hitting. On one side, you do have the flaring up of geopolitical tensions, as I was just talking about. But then equally, yesterday, one of the things that came out of the call between Putin and Trump is that Putin pledged to not attack energy infrastructure for the next 30 days. So that clearly is actually a negative driver for energy at this point. Remove some of that upside premium in case that energy infrastructure does get hit. So that is where we've ended up with oil this morning. Back trading at a $70 handle. We were at 71 yesterday. Dollar yen also in focus. We had the Bank of Japan meeting. As expected, no change on interest rates, but all eyes will be on that press conference that happens after our show in a couple of hours' time for any signals about the future path for interest rates. And indeed, this is coming at a time where the backdrop for inflation, wage pressure is beginning to build up in the Japanese economy. So something, no doubt, that Asian markets are paying close attention to. Dollar yen trading below 150. As for our chart today, remember, it is Fed Day today, so another data point to get through. A big event coming up for market participants. A lot of attention is going to be on their so-called economic projections, that dot plot. Right now, there are 2 rate cuts, the median rate cuts priced in by the end of this year, but it'll be interesting to see whether FOMC participants feel the need to change the outlook for interest rates, given now we do have a little bit more clarity, just a little bit more, about the Trump administration's thinking on tariffs. And so in light of that, they may have to adjust their forecasts for both inflation and growth. Most analysts are saying they will have to revise up their inflation forecast. If they do that, it will be difficult to justify the rate cuts that are priced into the market. So that is the setup going into the Fed today. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Well, I quickly ran through the Bank of Japan, but just walk us through the broad reaction in Asian markets today.
Well, we're seeing how the reaction is more or less the same in terms of the read-through of what the BOJ is going to do, whether you're looking at the bank stocks, the currency, or even bonds, where they're mostly holding on to their earlier declines. We're seeing the yen pretty flat. These Japanese bank stocks also hanging on to most of their earlier gains, and that is despite the BOJ flagging global uncertainties, which suggests some caution about future rate hikes. And as you said, we're going to be keeping a watch on Ueda-san's presser a couple hours from now. But aside from that, even with the sense of caution ahead of the Fed and that clock ticking down towards an April 2nd tariff deadline, Asia stocks are rising for a 4th day. And a lot of this in the past couple of sessions has been underpinned by Chinese tech names. Today, their rally is slowing a little. And we also had the likes of BofA saying that they see meaningful correction soon in Chinese stocks. What we're seeing potentially similar to the boom and bust cycle of 2015. The Hang Seng flat into the lunch break.
Avril, thank you so much. Avril Hong in Singapore. Russian President Vladimir Putin has rejected Donald Trump's call for a 30-day ceasefire in Ukraine. During his call with the U.S. president, Putin only agreed to limit attacks on energy infrastructure while demanding that the U.S. and others stop the flow of weapons and intelligence to Ukraine. Still, Trump is hailing the outcome as a victory and says his focus is on ensuring Russia and China don't get too close. Trump's special envoy, Steve Witkoff, told Fox News ceasefire talks will continue on Sunday in the Saudi Arabian city of Jeddah.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
For more, we're joined by our senior U.S. economy and government editor, Derek Waldbank. Derek, good to have you with us. Well, this wasn't quite the breakthrough that many were looking for out of that discussion, that phone call that took place between President Trump and President Putin. And it also appears as though Putin has the upper hand here.
Well, thank you so much for having me. Yeah, it was a really interesting discussion. I think that this was one that the whole world was watching, and it didn't come to a point of finality. I think that was one of the questions going in. Certainly, there had been a lot of questions from Ukrainian and European leaders about what might get agreed to. Now, here's the thing. There's a little bit of a discrepancy between what was actually agreed here. Russia had said energy infrastructure. The U.S. had said energy and infrastructure. That's kind of a critical distinction and a much broader distinction. If the U.S. interpretation is right, then it didn't take very long for that to fall away in some ways, because there were a fresh round of attacks across Ukraine as night fell, including Vladimir Zelensky said a hospital was struck, which is hospitals tend to count as infrastructure. So there's a lot of question here. Steve Witkoff, the envoy who met with Putin in advance of this meeting, told Fox News that that he saw this as a positive sign, that it might be a short distance between this and a full ceasefire, but there certainly is a certain amount of room for skepticism on this, and certainly a lot of the conditions that Russia is trying to put on some of the advancements here would be ones that would speak very heavily to Russia's advantage and very little to Ukraine's, were it not to be a durable ceasefire.
Yeah, one of the takeaways from that call was Russia are insisting on the halting of shipments of military ammunition, in addition to the sharing of intelligence with Ukraine, as one of the preconditions to signing on to the ceasefire deal. How likely is it that Ukraine's European allies actually heed that?
Yeah, I mean, that's an example of one of those things where if you actually had that, and let's say the ceasefire didn't hold for insert reason here, you would wind up with a situation where Russia has substantially been able to rearm and Ukraine has substantially not been able to. So things like that would be examples of conditions that European allies would be tremendously worried about anybody accepting on Ukraine's behalf.
Derek, very clear. Thank you so much. Derek Waldbank, our senior U.S. economy and government editor in Singapore. Well, moving over to this part of the world, Prime Minister Benjamin Netanyahu says Israel's renewed strikes are only the beginning, promising to continue military pressure until Hamas releases the remaining hostages. Let's bring in Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. And again, the death numbers, the death toll continues to climb. The latest figures put at 400. Netanyahu saying that this is just the beginning. How should we read these comments? Is this the resumption of the war again, once more in Gaza?
Yeah, I think you're absolutely right. I mean, two things to look at. Number one, they've once again asked people to evacuate, that is, move away from certain areas. That is usually a prelude either to more airstrikes or to basically reinforcing that buffer zone they have along the border. And then secondly, we know that they have been mobilizing troops again. So there's no certainty that there's a resumption of the ground war, but I would say it's more likely than not, because again, they are going right back to their initial war aim, which is to completely decapitate and displace Hamas, and you can only do that with boots on the ground.
What has been the reaction within Israel to continue these airstrikes? Because, again, there's been a lot of public outcry, and many have been criticizing the Netanyahu government for how they've handled the hostage situation and the ongoing ceasefire discussions.
I think that's fair. I mean, it is a whole spectrum. So at one end, you've got Ben Gvir that has basically rejoined the government, strengthened Bibi's position in the Knesset in terms of his majority. At the other end, as you say, you've got the hostage families, or the families of those still with hostages inside Gaza. And I have to say also some hostages that have been released and are kind of joining that narrative of saying, look, actually, that is the priority. You need to focus on getting the remaining hostages out, not just the ones that are alive, but also the ones that are dead. And then we can talk about how to structure and rule Gaza going forward.
What would bring Hamas to the table once again? What would allow for the release of these hostages?
I think it's very hard to see. I mean, it is basically their last leverage that they have. And I think that is the great concern within Israel, is that they were just going to keep spinning it out, because ultimately, why give up all your only bargaining chip? Because you knew what was going to come next. And that is a fair point. So there's a little bit of an impasse here. Again, I know the mediators are stepping in. There's going to be more talks. Is there any great confidence that they're going to get anywhere? Probably not. Certainly less, I would say, than a couple of weeks ago. But nonetheless, I think the international community, by and large, is going to try.
Yeah. Stuart, thank you so much. Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. Now, still ahead, we'll get the market outlook with algorithm research as investors look ahead to the Fed's rate decision amid uncertainty brought on by the trade war and geopolitical tensions. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stocks in Asia edging higher for a fourth day, with U.S. equity futures advancing after the S&P 500 sold off ahead of the Fed's rate decision. Traders are waiting for Fed Chair Jay Powell's signals on the rate path. Joining us now is Ketaki Sharma, founder and CEO of Algorithm Research. Big day coming up for markets today with the Fed meeting. What are you going to be watching out for yourself?
So I've been watching out for what they say about the growth projections and also about inflation expectations, because one of the key things that Fed is watching out for every time is about how inflation is anchored. I think inflation going forward has changed already, and inflation expectations have definitely gone up.
So there is a Wall Street Journal Fed watcher, Nick Tamaris. He's known to write these pieces around and into Fed meetings, and he put out an article this morning, which I thought was quite interesting, suggesting that the Fed can either cut because of good news, i.e. inflation has started to soften, or because of bad news, because the economy, the data is severely worsened, and the data would justify cutting interest rates. What he does say is that the window for cutting interest rates because of good data is beginning to close, i.e. you could start to see some upside pressures to inflation in the coming months. Are you of that view as well? And do you think that the Fed's window to cut essentially is getting smaller?
Absolutely. I think the Fed's window has definitely reduced in terms of rate cuts, because in tariff or no tariff, the talk of tariff has already led to inflation, higher inflation expectations. And it's not just that, when we introduce tariff and go back on our words, what we are essentially doing is that we are signaling to the market that there may be something coming up which leads to businesses stockpiling and, basically renting out more warehouses, putting pressure on transportation, and that raises costs. And when your costs rise, you eventually do pass it on to the consumers.
Do you think the market is overshooting pricing in 3 rate cuts this year?
I think so. I think so. Yeah. Yes.
Okay, so on the tariffs, we've got a big deadline approaching, April the 2nd. Is there anything that could happen into and around that date that would change your view of how the Fed are going to react to the tariff implementation? There's so many ifs and what ifs, and that's, herein lies the problem. But what do you think would be an upside risk around April the 2nd?
You know, I mean, upside risks are very limited at this stage, but like rolling back on the tariffs completely and not going ahead with it would be like the biggest upside risk, because at the moment that is creating a lot of uncertainties, and uncertainties are never good news. And that, together with, retaliatory measures, it's just, feeding into a lot of localization, nationalization, and protectionism. And that basically leads to lower growth. So we are jeopardizing growth and feeding inflation expectations. So we are talking about stagflation.
Stagflation, yeah. So this morning we were taking a look at some of the Asian equity performance versus the U.S. And maybe, at least for the first 2 months of this year, the theme has been Asia exceptionalism, not necessarily U.S. exceptionalism. Do you think this year the theme is going to be finding opportunities outside the U.S. as opposed to in the U.S.?
I think the theme is going to be, especially in the context of tariffs and the talks around tariffs, I think the economies that are bigger in size, that have domestic demand that is reliable, they are going to benefit. Therefore, we talk about Asia. Therefore, we talk about India. Therefore, we talk about China. Those are really huge. So even without that export demand, they can still sustain, they can still come out with some reasonable growth given the strong domestic demand.
Yeah. So then where specifically are you allocating your portfolio now?
So I'm optimistic about India. I'm optimistic about Indonesia. So those are two economies that are definitely are in the green for me. I'm also optimistic about these open economies, such as the UAE, that, when you have these protectionism policies in place, you will see a lot of rerouting of trade, right? And that's where we benefit here in the UAE. So I think there's opportunity here as well.
Yeah, it's funny. We did a segment yesterday on how some of the international funds, or at least those with EM exposure, are putting overweight into UAE stocks because of those reasons that you mentioned. So I think it's definitely on some people's radars. Really good to have you on the show today. Algorithm Research founder and CEO Ketaki Sharma. Now, still ahead, big U.S. banks swinging the axe. Morgan Stanley plans to cut around 2,000 staff this month, while Citi slashes executive bonus tied to its turnaround plan. All the details next. This is Bloomberg. Sequoia Capital is set to return about 25 times its invested capital from the sale of cybersecurity startup Wiz to Google parent Alphabet. If the deal does go through, a source says Sequoia will reap around $3 billion from its roughly 10% stake in Wiz. Alphabet agreed to buy the cybersecurity firm for $32 billion, its biggest ever deal. NVIDIA's chief executive has used his annual developer conference to address concerns that the cost of artificial intelligence computing is spiraling out of control. At the event, Jensen Huang unveiled more powerful chips that he said would provide a clearer payoff to customers, including a successor to NVIDIA's flagship AI processor called the Blackwell Ultra. And Citigroup is cutting payouts to hundreds of top executives in the final round of a 3-year special bonus program that tied their compensation to the bank's progress on risk and regulatory matters. Bloomberg Intelligence senior analyst Matt Ingram joins us for more. Matt, walk us through the decision out of Citi to reduce the bonus payout for some of these executives. What prompted it?
Hey, Jemana. So Citi has again found itself in the hot water with the regulators for some transactions and different things, some indiscretions. They set about restructuring the bank. They set about a transformation. One of the things they did as part of that transformation is tie the compensation of their senior management to the success of that program. The first 2 years were fine, but they're coming to the end of the third year, and they've said to their senior management, look, we're not where we want to be. We need to make more progress, and so you're going to feel that in your bonuses.
Yeah. Well, it's not just Citi. Other banks as well following a similar path. Morgan Stanley is said to be planning to cut 2,000 employees later this month. What is justifying the decision over there?
These things are hugely cyclical, Jemana. We have big periods of hiring, then we have stagnation, then we have big periods of layoffs. Goldman Sachs expedited its turnover program earlier in the year. And what we're seeing is that they're just not getting turnover. All of these investment banks are expecting a big upsurge in activity after the presidential election last November, and that hasn't happened. We're not seeing a big revenue upsurge, and so what they're doing is they're hiring a lot of senior bankers, and they need to make way for those senior bankers by clearing the decks. And so Morgan Stanley's 2,000 and Goldman Sachs' announcement earlier are creating headroom so they can hire those senior bankers to generate more revenue.
Interesting. Well, since we're talking about the banks, Nick, why don't you run us through how the U.S. banks have performed this year? A lot of volatility in stock markets. How has the financial sector held up?
Well, this is a surprising thing about the layoffs, Jumana. Our analysis using the different league tables in the Bloomberg terminal says they're doing okay in investment banking. It's not a stellar year, but it's healthy. And on the trading side, they've had a fantastic year. We saw really good results in December. They backed up really good results in September. So on the face of it, it actually looks, on a revenue point of view, things are pretty healthy. But the banks are talking about a cloudy outlook. They're talking about growing macro risks. And so I think they're prepping for that as well.
Yeah, that is the issue, I think, for so many of the business community out there. There's so much uncertainty in the air vis-a-vis policy. It is difficult for them to make some of those strategic decisions. Bloomberg Intelligence Senior Analyst Matt Ingram, thank you for running us through some of those stories. And staying with the banking sector, HSBC's U.S. operation is zeroing in on what it sees as a key investment banking unit after getting out of M&A and equity capital markets in the region. Lisa McCove, the bank's U.S. CEO, told Bloomberg TV they can support clients in financing, debt capital markets and leverage finance, and the global transaction banking, which she called the jewel of the crown business. All right, let's take a look at equity futures and how the market is shaping up. We did get a bit of a pullback yesterday on Wall Street, both the S&P and the Nasdaq ending the session down 1%, 1.7% respectively. Magnificent Seven in focus. All of the stocks of the Magnificent Seven are now underwater year to date. Meta was the last man standing. They're now actually trading negative year to date as well. But European futures not doing a whole lot, and perhaps a little bit of disappointment coming through there on the fact that that call between Trump and Putin didn't yield a breakthrough in terms of a ceasefire. So it remains to be seen from here how those discussions are going to continue to progress. So European futures trading flat despite a better end to the day yesterday, finishing up 0.7%. But it is a very big day coming up today. It is Fed Day. And so coming up, we're going to be talking about traders talking about geopolitical risks as well as that Federal Reserve decision and what to watch out for. Market insights with Tanto Capital Partners coming up with Ozan Özkural. He'll be joining us. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Putin pushes back. Russia's president agrees to limit attacks on Ukraine's energy infrastructure, but refuses the 30-day ceasefire demanded by the U.S. Talks are set to continue in Jeddah at the weekend. Israel's Prime Minister warns these strikes on Gaza are, quote, only the beginning, vowing more pressure until hostages are released. The Hamas Health Ministry says at least 400 people have been killed. Plus, dinner for two. President Trump hosts the UAE's national security advisor at the White House as the Gulf nation looks to advance economic and technology ties with the U.S. And it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, getting you up to speed on all these markets. A pullback yesterday, S&P and the Nasdaq ending in the red. The Nasdaq down more than 1.7%. All of the Magnificent Seven stocks now technically in the red, tracking losses year to date. Today, things are looking up, marginally so. Both the S&P and the Nasdaq up about 15 basis points, 20 basis points respectively. But of course, keeping a close eye on geopolitical developments as well. That phone call that took place between Trump and Putin didn't yield a breakthrough. So no signs of an imminent ceasefire. But the discussions are going to be continuing in Saudi Arabia over the course of this weekend. But perhaps that is why you are seeing a bit of a downward pressure on the oil complex this morning, on back of one line in particular from that phone call, and that is with President Putin pledging not to attack Ukrainian energy infrastructure over the next 30 days. So removing some of the upside geopolitical risk premium over there. And of course, more concerns about the outlook for the global economy. Goldman Sachs, for example, just putting out a note this morning saying that there are increasing downside pressures to the price of oil, namely because of the uncertainty vis-a-vis the global growth outlook and the tariff impact. Dollar yen also in focus. We had the Bank of Japan meeting today. No fireworks there. They did exactly what the market expected them to do, which is to keep rates on hold. But the Bank of Japan Governor Ueda will be giving a press conference in a couple of hours, and all eyes will be on that to see whether some hawkishness will come through or some signaling that hikes could come as soon as May. So investors there are watching out for that. We'll talk more about that with Avril in a moment. But one other part of, well, it's not really a terminal chart, but there's a function that we have on Bloomberg called the member ranked return, so MRR. And what we've done over here is we've listed defense stocks around the world. And I thought this one was actually quite a strong representation of the price action we've seen in some of these European defense stocks this year. So take a look at this. The best performing defense stocks have been in Europe. Rheinmetall, Leonardo, Thales, all of those stocks up more than well, in this case, 75%. So 80%, 84%. Rheinmetall up 134%. Equally, if you look at the bottom, some of the U.S. defense stocks have been underperforming. So this is a really good representation of some of the optimism swirling in Europe vis-a-vis Europeans' defense plans. And of course, on the back of that, we did see that German fiscal plan get approved in the lower house yesterday. So a really, really significant moment in Germany, and that is having a knock-on effect on European markets. We'll talk more about that later on the show too. But for now, let's get back to Asia markets. Avril Hong is in our Singapore studio. Walk us through the price action, Avril.
Yeah, we're seeing dollar yen at 149.5, and as for hawkish signals from Ueda-san, that does seem unlikely. Most analysts see the domestic political uncertainty. Remember, the Prime Minister Ishiba seeing his popularity falling after it emerged that he disbursed shopping vouchers to lawmakers. So that seems to be potentially something that would tie the BOJ's hands. Don't forget the tariff uncertainty as well. So potentially not a hawkish message from the BOJ governor in a couple of hours from now. And we also have traders saying that Japanese banks are advising their clients to sell, or rather to buy, dollar yen on dips as some form of protection given the risk of a prolonged hold by the BOJ until we get tariff clarity. Now, aside from the Japanese stocks that are pairing earlier gains now, we're keeping an eye on Chinese tech names when they return to trade in the next hour. Today, the likes of Xiaomi doing well after a sales beat. Of course, this earnings optimism has been really strong this week. The one we're watching later today is Tencent.
Yes, we are. And thank you for that, Avril, because I'm just about to do a segment on Tencent. Let's talk about the company. It is expected to post a profit jump of more than 60% in the fourth quarter, thanks to solid gaming demand. But investors are likely to focus on its AI strategy after the emergence of DeepSeek. For more, we're joined from Hong Kong by our China correspondent, Min Min Lo. Okay, Min Min, tell us some more about the quarter and what we should be expecting out of these earnings today.
Yeah, definitely. Investors will be focusing in particular on management comments on how the company is going to capitalize on AI developments, because AI has been the primary driver of that rally in tech stocks in China. Tencent's share prices up about 30% year to date so far, especially after it had incorporated DeepSeek into its WeChat app, which is an important milestone to potentially turning that app into an AI super app or an AI agent. And you look at that chart there, revenue expected to have grown by about 8% on year in the last quarter, and net income by about 30% or so. That's largely driven by the video gaming sector, with solid demand there, especially with the launch of that new title, Delta Force. Of course, some of the evergreen titles that are still doing pretty well as well. But going back to that AI story, HSBC actually saying that Tencent is moving or pushing the furthest among its peers in incorporating DeepSeek into its products, and it's actually also the closest to hitting a new record high in its share prices. So pretty exceptional 2024, which also means that going forward to 2025, analysts are saying that its earnings then are expected to start to normalize, especially given rising geopolitical headwinds and economic headwinds, because remember in January, the US Department of State had blacklisted Tencent. So that's another potential risk as well.
Okay, it sounds like a blockbuster earnings quarter is about to come up, but let me just zoom in a little bit on what you were saying on the AI front and the fact that they have actually been really speeding up developments in that area. So walk us through some of their latest AI services and how it's going to complement the overall mix of their offering.
That's right. So Tencent had recently released 5 new services that can convert text and images into 3D visuals and graphics. And again, it just shows you how that pace of development has really accelerated after that DeepSeek breakthrough. And there's a lot of synergy with Tencent's gaming segment here, because already gaming studios have been exploring how to use AI to speed up everything from pre-production to in-game design, and to speed up the process of taking a title to the market. And so this is an important development that could potentially help Tencent eventually achieve AI-generated video games. And admittedly, we're still a long way away from there, but still a good progress there. Certainly, investors will be watching out for how Tencent will be able to monetize these products, because so far, the AI ventures by Tencent still expected to be loss-making in the next 3 years, and that is a major concern as well.
Yeah, and probably not just for Tencent, for many others in this space as well. Min Lo, our China correspondent in Hong Kong, thank you so much. Well, President Donald Trump hosted a senior UAE official for dinner at the White House yesterday as the Gulf nation pushes to ease access to U.S. technology by investing in the country. Bloomberg understands National Security Advisor Sheikh Tahnoon bin Zayed Al Nahyan planned to talk with Trump about increasing Emirati investment in the U.S. technology and energy. Now, Trump said their conversations included Middle East security, as well as advancing economic and technological ties. The Democratic Republic of Congo and Rwanda say they're committed to a ceasefire. Their presidents held a surprise meeting in Doha as Rwanda-backed M23 rebels continue their occupation of the eastern part of DRC. Bloomberg's Andira Ganga joins us now from Kigali in Rwanda. Andira, you've been tracking this story very closely. Was it a surprise that this summit was held between the two presidents in Doha, of all places?
Hi, Jumana. Yes, it comes as a surprise, and for a couple of reasons why. President Tshisekedi has always maintained that he's not going to talk to M23. He will talk to Rwanda, who've always been very hesitant to have a conversation with them. Rwanda has always maintained that the problem is in DRC, and DRC needs to find local solutions. Then on the other hand, Rwanda has been receiving a lot of international pressure. So this meeting then comes as a good surprise for them, because it shows that they're committed to finding a lasting solution. The other surprise element of it is it comes against the backdrop of just the collapsed Angola talks between DRC and M23 after EU imposed sanctions on high and senior officials in the M23 movement, and in pulling out, M23 said that the sanctions were not in good faith and then jeopardized any dialogue and progress that could have been made from the Angola talks process. What we are also saying is that sanctions have been imposed on Rwanda. Some of their high-ranking military officials have been sanctioned. The CEO of Rwanda Mines Board, together with Gasabo Gold Refinery, on grounds of illegal trafficking of minerals from DRC into Rwanda before they're laundered into the global ecosystem. And because of this, there is a lot of diplomatic tension going around. Sanctions are flying. People have died. Thousands, close to 1 million, have been displaced from their homes. And we're just beginning to see a lot happening in the region.
Yeah, I just wonder what actually got the Rwandan President Kagame to the negotiating table and whether Rwanda maybe is beginning to feel the weight of mounting diplomatic pressure?
Jumana, the diplomatic pressure is beginning to mount, and one can say that they're beginning to feel that weight. However, when he spoke to his countrymen during a citizen outreach, he was very gallant. He said that the worst is behind them. This is a country that has gone through a genocide. Close to 1 million Tutsis lost their lives. So the worst is behind them. But then again, he encouraged them that moving forward, things might get tough, but they need to be courageous and bold and just keep working with the limited resources that they have. However, he was also very firm in his stance when he warned Belgium against interfering with their internal affairs. But also, a day after that speech was made, Rwanda decided to sever ties with Belgium and asked Belgian diplomats to leave the country in less than 48 hours.
Bloomberg's Ndira Ganga, thank you. And thank you for bringing in the historical context as well. Now, Nigeria has imposed a state of emergency in Rivers State in the oil-producing Niger Delta after explosions rocked crude pipelines in the area. President Bola Tinubu also ordered the suspension for 6 months of the state's governor and his deputy alongside local legislators. Tinubu cited security reports of disturbing incidents of vandalization of pipelines by some militants and accused the governor of taking no action to curtail them. Also important in terms of how we're thinking about the price of oil today, the reaction, and this is perhaps one of the upside risks from a supply perspective. So we'll keep an eye out on how the situation in Nigeria develops. Now, Chinese tech company Xiaomi has seen its sales grow at the fastest pace. Details next on those set of earnings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Xiaomi, which has been a stellar performer on the equity market, saw its sales grow at the fastest pace since 2021. The Chinese consumer tech giant also raised its EV sales targets for this year to 350,000 vehicles. Vice President and CFO Alain Lam told us exclusively they're now focused on improving gross margins.
I think that if you look at our results last year, I think that the one interesting thing is all the areas, major areas of our business continue to grow. Obviously, we have the EV business, which is a new business that we started delivering in April of last year. And, in 9 months, we delivered over 136,000 cars. But more than that is, if you look at the smartphone side, we grew our revenue by over 20% last year, right? We gained market share. Our global market share last year was 13.8%, which is 1% higher than last year. In China especially, we grew our market share by 1.7%. And obviously, the premiumization strategy has started to work. Right? If you look at our IoT business, last year was the first year that we exceeded 100 billion RMB in terms of revenue. Right. So, all in all, we put it together, you can see that. And the IoT business grew 30% as well year over year. So all in all, we've achieved very good result. As you mentioned, 35% year-over-year growth. And in fourth quarter of last year was the first quarter ever that we achieved over 100 billion RMB in terms of quarterly revenue. In terms of profit, obviously, we are focused on improving our gross margin. Our gross margin hit, 21.2% in our core business in 2024, which is similar level to 2023. And our EV gross margin was 18.5% for the entire 2024, which for a startup company in the EV business like us, I think is a remarkable achievement.
The numbers for the EV in particular, you only launched in April of 2024, and as you said, around 140,000 deliveries. This year, though, the target has been raised to 350,000 deliveries. So what's the strategy for having such a big increase?
You see a couple of our EVs, right? The red one being the SU7, and then the yellow one, which is something that we just launched, is our SU7 Ultra, which we are selling at a starting price of over 500,000 RMB, right? As I mentioned that, last year, we've been ramping up our production. Obviously, the SU7 was a huge success in the market. I think a lot of investors, a lot of customers like it. We have a huge backlog. If you look on the app this morning, I think the average waiting time for SU7 right now is at least 30 weeks. Right, so that's a huge backlog for us that we need to deliver. In terms of how we're going to do it this year, obviously, you've seen us yesterday raising our target from 300,000 for this year to 350,000 for this year. We need to work very hard to improve our production. Right, so we are happy. We are rapidly expanding our production capacity, and also ramping up our delivering capability as well, which we are very confident that we can achieve that 350,000 target for this year.
How do you go about doing it, though? I mean, do you have plans, for instance, to add on an extra factory? What's sort of the spending or the thinking in that area?
We are running one factory right now in Beijing, which is fully ramped up. We are working very hard to squeeze the extra production volume out of that factory. But at the same time, obviously, we need to continue to expand our production capabilities by adding new production sites, which we're working on very hard right now.
Xiaomi Vice President and CFO Alain Lam is speaking to Bloomberg's Annabelle Jewelers. Well, 2 NASA astronauts stuck in orbit for 9 months have finally returned to Earth in a SpaceX craft, capping a saga that captured international attention and deepened America's reliance on Elon Musk's company. The pair, seated inside a Dragon capsule, fell to Earth under parachutes and splashed down off the Florida coast yesterday evening as roughly 2.4 million viewers tuned in to SpaceX's live stream. And British rapid delivery startup Zap is planning to launch in Dubai as soon as this year, entering an increasingly crowded market in the Middle East. Zap was amongst a host of startups founded during the pandemic to deliver groceries and other items. Sources tell us the company has hired people in Dubai and held partnership talks with regional delivery companies Talabat and Careem. And coming up, will South Africa's national budget be passed before the April deadline? We cross live to Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. South Africa's 2 biggest political parties are in talks to reach a compromise over the national budget. President Ramaphosa's administration proposed an increase in VAT, derailing the passing of the budget and threatening the stability of the coalition. Chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Okay, so we've had several attempts to pass this budget, and now we know at least that the coalition parties are talking to one another. Just walk us through where we are with these discussions.
Right, Jumana. So we did get the tabling of the budget last week. That was the key point that we were marking. Now what we're at is the deliberations between these parties. And the ANC, the ruling party, does need another party to join in and get on board with this budget. And what we know, based on our reporting, as you were mentioning there, the Democratic Alliance, as we knew, they were in dispute about this increase in VAT. And they were looking to the ANC to potentially look to other spending adjustments instead of increasing VAT. So now the question is, will they come to a decision about what exactly to do with this budget? And they need to decide over the next few days about whether or not they are going to implement this or to set it back. And so that's really the question that many people are focusing in on. What we think at this point in time, the expectation is that it's unlikely that we're going to have to see this budget actually, this finance minister, as you're seeing there, set aside the budget. But the question is, what are the compromises that we could see from the different parties? And a lot of these parties are facing, this is new territory for many of them, right? This is a coalition government here, the first time that we've seen this since democracy. And so they are going to need to make some concessions. But what we've heard from our reporting is that the ANC is still standing by this 0.5% increase in VAT over the next 2 years to eventually get to 1%. But the question is then, what do they do? What do they need to potentially set aside in terms of this budget in order to actually get it to pass? Now, that is just in the interim what we need to do. They have until May, though, to actually pass the full budget.
Yeah, what leeway is there on those VAT discussions? So you talk about the desire to get it up and to continue increasing it, but if there's pushback, then where's the compromise going to come from?
Right. The big question is really, is the ANC going to have to look to potentially another party to get on board with this? Based on some of the reporting that we're seeing, we're actually seeing from Moody, they believe that the measures that the ANC is actually implementing here, or at least proposing here, will be implemented. But the focus then is going to be on fiscal consolidation, and that's really where they're going to need to shift their focus. It cannot just be on VAT. There's a number of other financial considerations that need to be taken into account, especially if you consider a lot of the social spending that is going to be adjusted in this budget. And so if the DA does not get on board, potentially then the ANC looks to some of these other coalition partners because they do need someone. They are not the only party, of course, that is able to make a decision. So the key is going to be over the next 2 weeks or so what the considerations are.
Yep, Bloomberg's chief Africa correspondent, Jennifer Zabazaja, thank you so much. We'll be back with you in a few moments. A look at equity futures as we head into the European session. Lots of green on the board now. S&P futures and Nasdaq bucking some of the losses seen in yesterday's session, now up 10 basis points, 20 basis points respectively. Euro stocks leaning flat. Now, coming up in the next hour, Trinh Nguyen from Natixis joins us to talk market strategy, and we'll get insight from Taylor University on the unfolding events across the Middle East. I'm Jumana Bersachi in Dubai. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Putin pushes back. Russia's president agrees to limit attacks on Ukraine's energy infrastructure, but refuses the 30-day ceasefire demanded by the U.S. Talks are set to continue in Jeddah at the weekend. Israel's Prime Minister warns the strikes on Gaza are, quote, only the beginning, vowing more pressure until hostages are released. The Hamas Health Ministry says at least 400 people have been killed. Plus, Asian exceptionalism. Shares gain in Asia for a fourth straight session, batting aside a U.S. tech-led sell-off. Every Magnificent Seven stock is now down year to date. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, we did get the BOJ decision not too long ago. Of course, all eyes are on the Fed decision later today. And of course, those economic projections that we'll get later today from Chair Jerome Powell.
Yes, that is a big one. Investors are definitely keenly awaiting what's going to come out of the Fed meeting later today. And there is going to be a focus on those dot plots. So bear with me because I'm going to get to that in a second. But for now, let me just run through how the markets are performing today. Brushing off some of the losses that we had in yesterday's session, both the S&P and the Nasdaq ending quite deeply in the red. So even though it looked as though the start of the week was going to be positive, pretty much all of those gains were erased yesterday. Magnificent Seven, all of the stocks in the basket are now negative year to date. Meta being the last man standing, they're also now negative as well. So sentiment really has turned negative over there. Today, though, futures not doing a whole lot. Brent also in focus. So we are seeing it tip a little bit lower. So we're down about 0.3%, perhaps on back of those headlines vis-a-vis the energy infrastructure and the fact that Putin has said that they will restrain from hitting Ukrainian energy infrastructure over the next 30 days. So if there was any political premium, geopolitical premium priced into the energy complex on back of that, it has been unwound this morning. So a little bit of downward pressure on oil. And then dollar yen in focus. Jen was just talking about the Bank of Japan. They did what the market expected them to do, which is nothing. They did not change interest rates. But the press conference is coming up shortly and will, again, be keenly parsed for any clues on interest rate policy from here as the market starts to think about interest rate hikes. But will the timing of those interest rate hikes be brought forward? This is the reaction in dollar yen. A little bit of weakness in yen this morning. But I did promise you a chart about the dot plot. So here we go. One of the most important things things to watch out for out of the meeting today is that median dot expectation of how many cuts FOMC participants are pricing in by the end of this year. As it stands now, there are 2 cuts. That's the median projection. But there are questions about whether the Fed may have to change the dot plot, particularly because now it does appear as though we have a little bit more understanding of what these tariffs could mean for both inflation and for growth. So they will probably have to revise their inflation forecast likely up, their growth projections likely down. On the back of that, may be difficult to justify deeper rate cuts for the rest of this year. So if there is a hawkish surprise, it may be that they change their dot plot from 2 interest rate cuts to 1. So something to watch out for later today. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Beyond the Bank of Japan, what else are you looking at?
Well, we're looking at how the Chinese stock rally seems to be continuing to take a breather today. The Hang Seng back from the lunch break, pairing some of the earlier morning session gains. And certainly despite Xiaomi's sales beat and it being among the Chinese tech stocks, they're still doing fairly well today, extending gains. There still seems to be a bit of earnings optimism, but the question remains how long this might last, especially when you have the likes of BofA saying that these Chinese stocks, we could soon see a meaningful correction because there are similarities with the boom and bust cycle of 2015. So that's what we're watching. Asia stocks are running higher for a 4th day, bucking the trend that we saw on Wall Street, but just highlighting as well, when you look at dollar yen, it does look like a sandwich between the potential caution from the BOJ as well as the Fed. And we're going to be watching not just for what the central bank governor says about the currency potentially, but also if he says anything about the bond market, because he previously did sound quite unbothered about the rise in yields in Japan.
Yeah. Thank you for flagging what we should be watching out for at that press conference. Avril Hong in Singapore, thank you. Russian President Vladimir Putin has rejected Donald Trump's call for a 30-day ceasefire in Ukraine. During his call with the U.S. president, Putin only agreed to limit attacks on energy infrastructure while demanding the U.S. and others stop the flow of weapons and intelligence to Ukraine. Still, Trump is hailing the outcome as a victory and says his focus is on ensuring Russia and China don't get too close.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
Trump's special envoy Steve Witkoff told Fox News that ceasefire talks will continue on Sunday in the Saudi Arabian city of Jeddah. So for more, we're joined by Tony Halpin, who leads our Russia economy and government coverage. Tony, well, this wasn't quite the outcome that I think people were hoping for. There was no breakthrough yesterday, per se. But is it fair to say as well that President Putin perhaps has the upper hand with these discussions because he's laying down conditions that are unlikely to be accepted by Ukraine?
Yes, I mean, I think the good thing from the Trump administration's viewpoint is that the two sides agreed to continue talking, but the disappointment for them must be that Putin is giving away very little. And even the thing he did concede yesterday, the truce on attacks on energy infrastructure, also actually benefits Russia because one of Ukraine's most effective strategies has been targeting Russian oil refineries, and presumably the Kremlin will argue that that's also covered by this agreement. So Putin gave away very little yesterday, and it's difficult to see really how that can be cast as a win.
What has been the response from Ukraine and from Zelensky to this phone call?
Well, I mean, even hours after the call, Kiev came under attack from Russian drones, and Ukrainian President Zelensky said that this was proof that Russia wasn't interested in a truce and didn't want peace. And this is the key question, really, for Ukraine. Ukraine committed to an unconditional ceasefire. It agreed with the US offer immediately. Russia has pushed back, and Putin hasn't agreed to the unconditional ceasefire. And he's kind of put it on to Trump to come up with the terms where he could agree with it, because he's requiring an end to arms deliveries to Ukraine and an end to intelligence sharing, which implies that Trump will have to go back to Kiev and say, well, he wants this to happen in order for Putin to agree to a truce.
Yeah, observers are saying that maybe he's just, Putin is just looking to buy time and deflecting from actually what's happening on the battleground. Talk us through what is actually happening on the ground right now in Ukraine.
Yes, I mean, Russia doesn't have really an incentive to stop fighting right now. They have the upper hand in their own Kursk region. They're pushing out Ukrainian forces there that have occupied that territory for something like 7 or 8 months. And they're making some slow progress in eastern Ukraine. So they don't have much incentive to stop fighting right now. And it's clear that they're getting more time to do that.
Yeah. Tony, thank you so much for the analysis. Tony Halpin, who leads our Russia economy and government coverage.
Let's turn to another story we're following. Prime Minister Benjamin Netanyahu says Israel's renewed strikes are only the beginning, promising to continue military pressure until Hamas releases the remaining hostages. Joining us now is Bloomberg's Dan Williams from Jerusalem. So, Dan, clearly this period of relative calm has subsided quite a bit. What is Israel trying to achieve here?
Well, I think Israel regrets, to judge from Netanyahu's comments last night, the fact that 2.5 weeks passed in a kind of limbo. The last ceasefire with Hamas expired in that time period. Israel did not resume warfare, neither did Hamas, but there was no progress in hostage talks. There are 59 hostages remaining in the Gaza Strip, which Israel is intent on recovering. So far, it's tried to do it through a combination of negotiations and warfare. And what Netanyahu is saying is now Israel will resume the warfare, albeit in a staggered fashion. For now, Israel is restraining itself to airstrikes, albeit with a good deal of damage and casualties in the Gaza Strip, while pressuring Hamas to return to negotiations on terms more agreeable to Israel. So it would not appear right now that Israel is an intent on a full resumption of the war to the point where Hamas might be crushed militarily or Israeli troops sweep through the Gaza Strip again. But it's in that direction while leaving the door open for Hamas to come back to the negotiating table with different terms.
Dan, how should we be thinking about the situation there between Israel and Hamas happening concurrently as we're seeing the U.S. escalation against the Houthis? How are you assessing now this escalation of conflict now in the region?
Well, I think we're seeing one set of allies, Israel and the United States, taking on another set of allies, Hamas and the Houthis, but more specifically Iran, which sponsors both of those groups. This has pretty much been said explicitly by President Trump now. The Houthis did fire one ballistic missile at Israel yesterday. This was probably to be expected, given that this is really the last Iranian proxy group still up and fighting on behalf of Gaza after Israel demolished to a large degree Hezbollah in Lebanon, to the fall of the Assad regime in Syria. So what we have is the United States, which has far greater firepower to bear in the Red Sea, bringing that firepower to bear against the Houthis for a number of reasons, including the fact that the Houthis are again threatening international shipping in that waterway. But I don't think there's any question now that that rather surprising campaign launched by the Americans only a few days before this surprise campaign launched by Israel in Gaza, there is an interplay between the two operationally. There is a support between the two. This has pretty much been stated by officials in both countries now.
Wow. And of course, becoming a deadly situation, continuing to be a deadly situation. Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for your reporting. Thanks for joining us. Now, still ahead, we assess the risks and opportunities in the global economy with Natixis as investors look ahead to the Fed's rate decision. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stocks in Asia edging higher for a fourth day, with U.S. equity futures advancing as well after the S&P 500 sold off yesterday ahead of the Fed's rate decision later today. Traders are on watch for Fed Chair Jay Powell's signals on the rate path. Joining us now is Trinh Nguyen, Natixis Senior Emerging Market Economist. Trinh, great to speak with you this morning. Let's just start here with the fourth day of upside we are seeing for Asia tech stocks. We heard earlier from our colleague Avro Hong saying that potentially we could, some analysts saying potentially we could see a correction here. I mean, what's your expectation for how far this upside could go for Asia tech stocks?
Well, our view is that when we zoom out and look at 2025, it's going to feel a lot better than what we feel in Q1 and Q2. Two things: the Fed is not cutting tonight, but it's probably going to cut rates, and it also can do QT. That takes a lot of pressure on Asian markets that have suffered from very strong U.S. rates and very strong U.S. growth, right? Those two things are going down this year, and that relieves the pressure. The second thing is that the uncertainty over tariffs mean that a lot of Asian policymakers have to turn inward for growth. While they benefit from the front loading of exports to the U.S. in Q1, one thing is very certain is that exports are going to likely deteriorate. So fiscal policy is going to take a much stronger stance. For China, for example, it has to be much more friendly to the private sector, particularly the tech sector, and it needs to use that as a leverage to boost domestic demand, to offset exports that's likely not to grow as fast as Q1 front loading. So therefore, we think fiscal policy and domestic consumption is going to play a bigger role.
Trinh, you said the Fed is not cutting later today. What then is your expectation for the telegraphing, if anything, we get from Jay Powell?
Well, U.S. data is soft because of the uncertainty over tariffs, which leads to consumption and investment being pulled downward. Plus, the uncertainty of tariffs means everyone is front-loading imports, and that drags down net exports. So growth is deteriorating, but it's not clear that inflation is going down, right? We have services going lower, but goods inflation could be spiking. So for the Fed, it's going to buy time to see. It has a lot of tools. It doesn't have to move interest rates. It has QT that it can also signal some support as well. What markets will look for is the long-term neutral rate to see the Fed, of course, is likely to cut, but where it will settle. And I think that neutral rate is going to higher. It will look for also balance sheets. If it's not going to ease on the balance sheet side, is it going to do so in May? And of course, the SEP. Our expectation is that there isn't going to be change to projections, but clearly there are other areas that can move for the Fed. So in other words, we have a slowdown of growth and uncertainty on tariffs, but we're not going to have the price of the dollar going lower just yet. It will move lower. And so what markets will want to see when is that going to happen, because it's pricing in end of Q2 at the moment. And I think when you zoom out, and again, as I mentioned, the world is full of uncertainty at the moment. But when we zoom out to the whole picture of the U.S. and the Fed, we're going to see that President Trump, as much as he loves to use tariffs as a blunt tool to totally eliminate the U.S. trade deficit and trade imbalances, the fact is that the U.S. cannot produce as fast as the threats of tariffs. And tariffs will need to move in a much more targeted fashion, very similar to 2018. And as a result, in likelihood that we're going to see much more certainty on trade moving forward as well.
Yeah, that's interesting. Thank you for laying out the full narrative there, Trinh. Let me ask you about this sort of bigger picture theme, and it ties into Jen's first question. A few months ago, everyone was really hyped up about U.S. exceptionalism and that the U.S. economy and U.S. financial markets were set to outperform this year. If anything, the main outperformance has come from Europe and from China for the most part of 2025. Do you expect that theme to continue, i.e., are we moving away from U.S. exceptionalism to China or Asia exceptionalism, potentially even German exceptionalism this year?
I think the key mover here is really expectations of the dollar, right? The dollar, of course, the real rates is really high, but it's going lower on the longer end. And also the shorter end, people didn't expect any rate cuts because they thought that Trump is going to go very gentle and targeted. And then he's going to give them all the goodies, which is deregulation and lower tax cuts and so on and so forth. But so far, you get a lot of tariffs, threats, but not a lot of the goodies. So I do think in the short term, that is going to be much more salient. And therefore, the dollar moving lower is going to alleviate a lot of pressure in the softer U.S. growth, right? And meanwhile, the expectations for Europe was very low. It didn't see a way out of all these news about it being behind in tech, being behind in so many areas, and also sovereign risks, right? Germany election, France, and so on and so forth. But now we have fiscal support and a huge bazooka coming through. So we not only have lower rates in Europe, we also have fiscal support. And I think that is the case across the world. Not everyone is a winner, of course. I think it's going to be very clear that Trump is going to continue with tariffs in a targeted way. So when you look across the world, there is a reflation trade happening, and that fiscal policy support is actually much more salient. Meanwhile, in the U.S., people are worried about fiscal tightening, right, because of Dodge. So I do think in Q1 and particularly Q1 and early Q2, there is a lot of softness in the U.S. given the uncertainty, and I think in the lead up to the 2nd of April as well. And also, it's going to be quite messy how they're going to implement it. They're still as clear as mud. But beyond that, I think there is going to be a rotation back to the U.S. likely in the second half.
Okay, very clear. Trinh, always a pleasure to speak to you. Thanks so much for coming on our show. Trinh Nguyen, Natixis Senior Emerging Market Economist. And coming up, Russia dangles cheap LNG in front of buyers. We get the details of why energy firms expect prices to rise next year. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Russian energy firms are wooing buyers to snap up LNG while it's still cheap. They're claiming that they expect U.S. sanctions will be lifted and Arctic LNG will become more expensive next year. So for more on this, we're joined by Stephen Sachinsky, who leads our Asia energy coverage in Singapore. The logic seems to me a little bit of a roundabout way of looking at things. So Russia are trying to convince people to buy their LNG now in anticipation of U.S. sanctions getting lifted and therefore the price of LNG going up once the sanctions are lifted. Walk us through that.
So the view is that the LNG that's being offered from the sanctioned Arctic LNG export plant, no one in the market wants it. It's being offered at a very deep discount because of the sanctions that came in place under the Biden administration. That facility has exported 8 cargoes on dark fleet ships since last year, but none of them have found a buyer. They've all either gone to storage or are still kind of wandering around the ocean trying to find someplace to go. Those shipments are being offered very cheap. But the pitch is if this LNG is no longer sanctioned, then it will hit the regular price in the spot market. That discount will disappear. And so because of that, there's been this offer, there have been these talks behind closed doors between different intermediaries to try to see who would be willing to buy it. Still, no one wants to touch it. They're worried about retaliation, the sanctions, banks don't want to get involved. It's still a sticky issue. But the view is that with relations between Russia and the United States getting better, potentially the Trump administration will look at removing these Biden-era sanctions to allow the LNG to flow freely. Still unclear whether or not that's what the Trump administration will do. We had the talks yesterday between Trump and Putin. That resulted in the ceasefire on just the oil and energy infrastructure within Ukraine, but not a full ceasefire that Kiev was looking for. So whether that leads to more de-escalation, it's unclear, but it's something that the market will be carefully watching, especially as it might affect the price of certain LNG shipments.
And Stephen, we can't escape the T word. Here I'm talking about tariffs. And I thought it was really interesting, a story up on the terminal. You wrote it, actually, about how China are no longer importing as much U.S. LNG because of these tariffs imposed by the Trump administration. So tell us more about that.
Sure. So right after the Trump administration put its first round of tariffs on China in early February, a minute later, Beijing slapped retaliatory tariffs on U.S. LNG. The U.S. is the world's biggest LNG exporter. China is the world's biggest LNG importer. So it would make a lot of sense for China to be taking as much of that LNG as they can if it's within economic sense. But because of the tariffs on American LNG from Beijing, Chinese LNG buyers have essentially shifted their flows and stopped bringing that fuel into their ports. It's been about 41 days since the last time a U.S. LNG shipment has come to China. That's the longest streak in almost 2 years. The last trade war in 2018, 2019, into early 2020, you saw China absolutely stopping LNG imports as well when there were similar tariffs. So you could see this sort of dragging on for a while. Chinese buyers are shifting their supply. They're diverting their U.S. LNG shipments to go to other places like Europe or other Asian ports. The reason, one, because of the tariffs, but also because the prices abroad are also better. We're still in the midst of the aftershocks of the energy crisis, and it's just a better profit to sell it abroad.
So interesting. Thank you for bringing us all of that analysis. Really good reporting there. Bloomberg's Stephen Sachinsky. Now, coming up, geopolitical concerns continue to fester following renewed violence in the Middle East, and as Russian President Putin refuses the 30-day truce. We'll be back.
This is Horizons Middle East and Africa, our top stories this morning. Putin pushes back. Russia's president agrees to limit attacks on Ukraine's energy infrastructure, but refuses the 30-day ceasefire demanded by the U.S. Talks are set to continue in Jeddah at the weekend. Israel's prime minister warns the strikes on Gaza are, quote, only the beginning, vowing more pressure until hostages are released. The Hamas health ministry says at least 400 people have been killed. Plus, dinner for two. President Trump hosts the UAE's national security advisor at the White House as the Gulf nation looks to advance economic and technology ties with the U.S. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa, the second half of the second hour. Jen, quite a lot to contend with the news, the phone call between Trump and Putin, and obviously the developments over here in this part of the world in the Middle East. But then the Fed is going to be very much on investors' focus today.
Right. And of course, the BOJ press conference coming in just a short amount of time. So, yes, Jumana, as you were mentioning, a lot for investors to parse through and make sense of really where markets are at this point in time. But if we just take a look at where markets are positioned ahead of the trading day, Jumana was mentioning, of course, all eyes are on that FOMC rate decision later today. But if we just take a look at U.S. equity futures, they are seeing some marginal upside, at least to start the day. But that is coming after quite a down day for Wall Street on Tuesday across the board. We saw the major indices closing in the red ahead of the Fed's decision day. Tech stocks taking a particular hit on Tuesday, S&P snapping a two-day rally. But we're seeing both the S&P and NASDAQ on pace for their worst month since December of 2022. All eyes will, of course, be on the price action, though, after we get the Fed decision. The U.S. 10-year yield is up just about 1 basis point there, trading near 4.29% there. Many Fed watchers are paying close attention to the updated forecast. The likelihood is that we will see a hold from the Fed, but it's really the projections that are the focus here and those updated dot plots if we do get them. Dollar yen, of course, as we were just talking about, the BOJ did have their decision earlier today to keep rates on hold, but Governor Ueda is expected to give that press conference in just a few hours time, and hopefully will give some indication on the guidance ahead. MLive, though, if we take a look at the dollar yen, seeing potentially 150 on the horizon. Clearly, we're very close to that right now. If we take a look at dollar yen, 149.70. And finally, Brent crude reversing some of the gains we saw overnight, trading negative, down about 0.3%, just over $70 a barrel there. Oil is facing a number of headwinds. Of course, we've been talking quite a bit about the increasing supply globally, weaker demand potentially, but that clearly overshadowing a lot of the escalation that we're seeing in the Middle East for Brent crude. And very quickly, let's just zero in on the Fed decision coming later today. We were speaking with our guest earlier about the SEP decision. That is a summary of economic projections. In December, we did see Fed officials penciling in 2 rate cuts for the year. But since then, there is, of course, the added pressure of trade tariffs. And then, of course, that having an effect on consumer sentiment in the U.S. And potentially raising inflation expectations. So what the dot plot looks like going forward will be a lot of the focus later today. Let's, though, now check in on Indonesia's stocks. Tuesday was a pretty bruising day. Avril Hong is standing by to give us a look at where we're at right now. Avril, what have you got?
Well, Jen, it was a stock market rout that certainly grabbed headlines. And while those declines of about 7% were eventually pared to about 4% by the close, and then today you saw that rebound of about 1% into the lunch break, there are still those lingering concerns about the investability of Indonesia's stock markets. Now, some of the potential, boosts that we're seeing for the markets in Indonesia today include the likes of UBS saying that the correction is a buy opportunity. And then you also had the market regulator after the rout easing some of these share buyback rules. But as I said, those concerns about Indonesia's fundamentals, I think, are a lingering doubt, especially when you have the concerns about fiscal discipline, along with those rumors which were later dispelled about the finance minister's resignation, and then the external risks, not just about the Fed, but also these tariff concerns. So we're watching for Bank Indonesia's decision that's due this afternoon. It's not expected to change on rates because this would exacerbate the pressure on the currency, although there are a handful of economists who say this is still too close to call because BI could actually put the focus on growth. They could prioritize that. We have our MLive strategists also highlighting that a cut would do little to stem the stock market rout, and indeed the currency pressure could actually spill over to the stock market. So some of these drivers that we're keeping an eye on when it comes to Indonesia's stock markets today.
Yeah, more declines in the index. Avril Hong in Singapore, thank you so much. Well, a big focus on geopolitics once again today after Israel's Prime Minister warned fresh strikes on Gaza are, quote, only the beginning. Joining us is Julia Roknifard, a senior lecturer at the School of Law and Governance at Taylor's University in Malaysia. Good to have you with us on the show this morning. It feels as though the situation in the Middle East today is very different from how sentiment was about a month ago, 2 months ago, when that ceasefire kicked in, and there was this feeling of relief and perhaps optimism about what could happen next. Even talks about a potential reconstruction plan for Gaza. But the strikes and the death toll and the rhetoric over the last 24 hours seem to have taken us back to a dark place again. Would you say that we are back once again at ground zero?
Back, or even worse, and I think that the optimism that some people expressed on the day that the ceasefire was agreed upon was rather wishful thinking than an optimism that was backed by the certainty that the ceasefire is going to materialize through phases 2 and 3. To be honest, it doesn't seem that many expected it to move beyond the phase 1. I was one of those looking at the whole picture. Because overall, looking at the picture of the Israeli domestic politics, and even though Prime Minister Netanyahu rejects the comments by the analysts and calling them Hamas propaganda, that it's motivated majorly by the domestic considerations, but it seems to be pretty much true that these renewed strikes are motivated by the domestic factors. And now we can see that the former National Security Minister Ben Gvir promising to come back to the government. So I think we are exactly where we are supposed to be, and maybe some would be even surprised that the ceasefire lasted that long. It doesn't seem there was an intention to go beyond phase 2, to be honest.
Okay, so given you brought up some of the domestic issues that Netanyahu is facing back home, the pressure also from the family of hostages to secure the release of the outstanding hostages, and it's estimated there's still 59 held in captivity. What do you think the off-ramp is going to be for Netanyahu to come to a ceasefire agreement that is actually acceptable to the government officials on the right that he's appealing to?
There is no ceasefire deal that is acceptable. Now, that was the reason why Ben Gvir quit the government, the coalition government, in the first place. It seems that the plan was probably to somehow get the hostages, all the hostages, released within the phase 2 or within this extended part of the phase 2, which Israeli government was pressing Hamas and the guarantors to agree upon, but there was no agreement, so it dragged on its own. In fact, the remaining hostages were still supposed to spill over sort of in the phase 2. So not all the hostages were supposed to be released within the phase 1 in the first place. So the plan was to pressure Hamas into releasing hostages within the phase 1, even an extended one, to lift off the pressure domestically from Netanyahu government in order to, unfortunately, continue, get on with the conflict.
Yeah. So it looks, according to reports that came out yesterday morning, the U.S. were actually aware of the airstrikes that Israel were going to launch into Gaza. How should we read the Trump administration's policy towards Israel? And do you think it is actually unconditional?
Indeed, Trump's administration stated support for the Israeli government, for Netanyahu government in particular. And there is no surprise here either in the support that the U.S. is rendering for the U.S. Hamas as a terrorist group. And pretty much nothing changed. So this support is not surprising. On the other hand, Trump currently has other considerations. He needs to wrap up with the war in Ukraine. That looks like pretty much where his aspirations are. But in order to, and that's my idea of what's going on, in order to not appear weak to the domestic audiences, to the U.S. partners, or probably to be able to sell well this peace on Ukraine, why the U.S. is causing up to Russia so much as some would criticize, we would show on the other front, which is the Middle East. And that would probably also involve the recent Houthi attacks, the attacks against the Houthis in Yemen.
Yeah, big portfolio to think about. Julia Roknifard, senior lecturer at the School of Law and Governance at Taylor's University. Thanks for joining us today on the show.
To be with you.
Now, Istanbul's mayor, Ekrem Imamoglu, has been detained at his home. That's according to a statement by the prosecutor's office. It comes just a day after Turkish authorities revoked his university diploma. It's a move that could bar him from challenging Recep Tayyip Erdogan in the next presidential election. For more, let's bring in Bloomberg's Istanbul deputy bureau chief. That's Beryl Akman. So, Beryl, this just coming over the past hour, this news just coming. Talk to us about this detention of Imamoglu and the significance of it. Of course, just days before he was likely to be named the party candidate.
Exactly. So Imamoglu, since being elected as Istanbul's mayor, first in 2019 and again last year, has faced a slew of investigations and court cases against him, which he has said were all politically motivated. But his detention today is definitely an escalation in the case and in his situation. He's been detained along with hundreds of others as part of a case into criminal activity, and prosecutors are accusing him of being a ringleader. He's denied all these accusations in the past, but just like you mentioned, he was supposed to be the candidate of his party, the only candidate in the Sunday primaries. So the future of that is uncertain, whether the main opposition party, the CHP, is going to move ahead with another candidate, or they're going to push forward with Imamoglu. So like you said, this is definitely a developing story, and we'll be watching out further, both for market reaction and what happens politically.
Yeah, and certainly we're also getting some indications that potentially there's also been some blockages of roads so that protests don't actually happen. We'll follow that. But, Beryl, happening at the same time, Turkey's president set to meet or planning to meet President Trump. What is the goal here, especially if we consider what he's facing domestically? What is a trip to Washington likely to do?
So Turkey and U.S. relations have been strained in recent years over a number of issues, including in President Trump's first term. On Turkey's agenda are two major elements. One is the U.S. defense sanctions that were implemented over Turkey's procurement of Russian S-400 missiles, and the other is the Syrian Kurdish force presence in northern Syria that the U.S. has partnered with in its fight against Islamic State group. President Erdogan already held a phone call with Trump over the weekend, and these issues were also mentioned in the call per statement from the Turkish presidency's office. So we expect the meeting, based on Bloomberg's reporting, is due to be held in Washington perhaps by next month. So we expect these issues to be brought up at least from the Turkish side when that meeting takes place.
A lot to watch out for there. Bloomberg's Istanbul Deputy Bureau Chief Beryl Ahmed. Beryl, thanks so much for your reporting. Thanks for joining us. Now, coming up, the leaders of Rwanda and the Democratic Republic of Congo meet in Doha over the ongoing conflict in the region. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Democratic Republic of Congo and Rwanda say they're committed to a ceasefire. Their presidents held a surprise meeting in Doha as Rwanda-backed M23 rebels continue their occupation of the eastern part of the DRC. Bloomberg's Andiro Oganga joins us now from Kigali, Rwanda, and has been following this story. So, Andiro, walk us through just how significant this meeting between Kagame and Tshisekedi was.
Hi, Jen. So this was very significant because, one, President Tshisekedi has always maintained that he doesn't want to talk to M23. He's accused Rwanda of backing these rebels and says that if there's a conversation, it has to be had between these two heads of states. On the other front, international criticism and pressure is beginning to mount on Rwanda. And so the significance of this is that it comes off as if Rwanda is committed to finding a lasting solution to the conflict in the eastern part of the Democratic Republic of Congo. And it also comes against the backdrop of collapsed talks between M23 and DRC that was supposed to happen in Angola. And this came after the European Union imposed sanctions on senior officials of M23. And in reacting to these sanctions, M23 said they are not in good faith and could jeopardize the dialogue and progress that could have been made in Angola. We are also seeing these sanctions stretch through Rwanda. Top-ranking military officials have been sanctioned. The CEO of Rwanda Mining Board and also Gasabo Gold Refinery on grounds of trafficking of illegal minerals from DRC into Rwanda before they're laundered into the global ecosystem. And pressure is beginning to mount into the region. More than 1 million people displaced, thousands are dead, and this is beginning to raise diplomatic temperatures in the region.
Considering those sanctions you were just noting there, Andiro, is it safe to say that Rwanda is potentially feeling the weight of those sanctions and now willing to go to the table and actually discuss this?
Jen, there's two folds to this question because, one, if you look at it from the inside perspective when you're in Rwanda, they're very gallant, they're very proud. On Sunday, they had a citizen outreach program, and the president was saying that the worst is behind them. Whatever it is that comes, they'll be able to survive it. Sanctions will come, resources might be limited, but they will still move forward with courage. And he was also very firm to mean that they're not going to take things lying low. He warned Belgium against interfering with their local and internal issues, and barely 24 hours later, Rwanda was cutting diplomatic ties with Belgium, asking their diplomats to leave the country. Rwanda has also stopped bilateral aid partnership with Belgium, and this just goes to show that where they can compromise, they will, but where they feel like they're being pushed against the wall, they're willing to fight back.
Yeah, Bloomberg's Andiro Oganga in Kigali for us with the latest. Andiro, thanks as always. Appreciate it. Sticking in the region, Nigeria has imposed a state of emergency in River State in the oil-producing Niger Delta after explosions rocked crude pipelines in the area. President Bola Tinubu also ordered the suspension for 6 months of the state's governor and his deputy alongside local legislators. Tinubu cited security reports of disturbing incidents of vandalization of pipelines by some militants and accused the governor of taking no action to curtail them. Now, coming up, European defense stocks on the rise over geopolitical tensions in the world. We'll bring you the details next. This is Bloomberg.
Second week was freezing. We went back down to like 0.
Yeah.
Yeah.
Yeah, and you're like, okay, it's time to come back to Dubai.
Yeah, basically.
All right, cool. So defense stocks, I'm excited to talk about this. We had a nice, I learned the term MRR today, about it ranked all of the defense stocks in Europe.
Yeah.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Defense stocks in Europe have risen with Germany's spending plans, the Trump-Putin call, and Israel's strikes in Gaza also in focus. A basket of defense stocks has outperformed the European benchmark this year, making gains of, listen to this, almost 80% year to date. For more, we're joined by Farah Al-Bahrawi, who leads our EMEA equity coverage. Pretty stunning price action in these defense stocks. Tell us more about what you've been seeing going on in that space.
Absolutely. Good morning, Jumana. Well, we see defense stocks sort of imitating a rally that we've seen in tech stocks in the past, some even pointing to the fact that it could be a bubble, or at least some metrics. But really what's happening here is that this is a sort of a once-in-a-lifetime opportunity for European countries to come in, boost their economy, boost their defense spending, and the pledges, or at least the promises that they're planning to pass through and trickle down into earnings, have really made investors quite bullish. We've seen Goldman's basket of defense stocks over the past 6 days rally. Yesterday, we had the vote pass through in Germany. And if you look at stocks, Rheinmetall has been one of those key equities that has risen 1,300% since the start of the war in Ukraine. So investors continue to be really bullish about the potential impact of earnings trickling down through this sector.
Yeah, I mean, how is this being reflected in valuations? Give us some historical comps here. Are we getting to the point where things are looking a bit toppish, or are we still cheap relative to where these stocks have traded historically?
It is starting to get lofty for defense. I mean, they're trading at higher valuations than even tech in Europe at this point, at an 80% premium to the market. But again, investors are willing to buy. That's not to say that they're not now looking beyond the sectors that beyond defense and into other sectors that will benefit from the pledges in Germany. So this is materials, electric power equipment, utilities, gas, industrial companies. So we have BI saying that the MDAX, which is Germany's index of mid-cap companies, is one that's going to potentially benefit more from what is doing. And yeah, that's one to keep an eye out on as well.
Farah, what is the potential for this rally to broaden out to include not just defense stocks, but other sectors as well?
Yeah, so that's exactly BI's point, really. So you have these companies like industrials, materials that make up a big part of the MDAX, which is more exposed to Germany than the DAX index itself. And the DAX has rallied quite significantly, actually. So the bet now is the small caps in Germany, the mid-cap companies in Germany, and not just defense, because Germany is planning to invest a lot of money into infrastructure. So infrastructure is going to be the key theme for there now.
So interesting. Thank you. Yeah, thank you for giving us an overview of what's been going on there. And Rheinmetall, you were just saying, also up more than, I think, like 120% year to date. On average, these stocks are up 80% in Germany. So quite the performance there. Farah Al-Bahrawi, who leads our EMEA equity coverage. Well, it's a big day for investors. We've got the FOMC meeting coming up, and we will be watching out for any changes in the economic projections. Likely, we may get a small downgrade of growth come through, a potentially upgrade to inflation. The big focus, though, is going to be on what happens to those dots, i.e. what the FOMC participants are estimating will happen interest rates the rest of the year. Right now, there are 2 interest rate cuts being projected, but that, of course, may change if if there are substantial inflation risks to the upside. So keep an eye out for that. As we head into the European session, though, we are seeing S&P futures, Nasdaq futures lean towards the green, up about 10 basis points, and then Euro Stoxx futures trading flat. No breakthrough with that discussion that took place between Putin and Trump. That's it for Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe.